guys, welcome back to a brand new video. I'm RexFinance, and today I'm going to be talking about 10 high growth stocks that have fallen 30% or more from their 52-week highs. I'm sure about everybody watching this video is aware of the fact that growth stocks and tech stocks in general have gotten hammered over the past 2 weeks or so. But what this has done is provided such a great buying opportunity. And no matter how many times people hear it, whether it's from me, Warren Buffett, Cathie Wood, or other YouTubers, they still won't believe that on these red days, on these pullbacks, this is actually the best time to be buying these stocks. You can buy stocks for a discount, you can buy companies you believe in, and then in the end, your portfolio goes exponentially higher as they recover in share price and begin their climb back up. We can just look at today to see the evidence that there's somewhat of a rotation happening right now, where the Dow Jones Industrial Average was up 300 points or 1.5%, but on the other hand, the NASDAQ was down 2.5% or 300 points. So again, we're seeing growth stocks, technology stocks get hammered down, while the Dow Jones Industrial Average, boring companies, defensive, safe stocks get risen up in share price. Right now, especially in the NASDAQ, there is widespread fear. And if there is one Warren Buffett quote that I like the most, it's his quote that says, "Be greedy when others are fearful and be fearful when others are greedy." Right now, again, we're in this fearful time where a lot of investors, some of you that are watching this video probably, are very, very fearful right now. But this has driven the stock prices down in these growth stocks, and ultimately it's given us such a great buying opportunity. And I will put my entire reputation out on the line here, but I promise you this is a blessing in disguise, where you get a chance to add to companies you already own and love, or even open up a new position on a stock you've been looking to open up. Even according to Cathie Wood, this sort of pullback when you're investing in innovation is expected. But in the long run, this type of correction is actually fantastic for these growth stocks and these companies that are innovating. So Cathie Wood has even put her reputation out on the line to say that this is healthy movement. If you buy up growth stocks right now, you're going to end up performing better than the overall market in the long term. And I 100% back what she said. I am not a financial advisor. I'm just a 19-year-old investor who's been blessed enough to build the Robinhood portfolio to $200,000. These are just my thoughts, opinions, and ideas. It's up to you guys to do real due diligence on your own and decide whether you want to buy these stocks or not. As a last note before we get into these 10 stocks, I just want to remind you, it is not healthy for stocks to go up in a straight line without a hiccup or two along the way. This hiccup is entirely warranted, and overall, it is a very good thing for us bulls. So let's go ahead and get into stock pick number 1, and this would not be a RexFinance video if I did not mention CleanSpark. So this is stock number 1, and you talk about high growth. CleanSpark is a company that's growing at rates that only a handful of companies can match. Their legacy business involves microgrids, and the microgrid industry is growing at 28% compounded annually itself. On top of this, CleanSpark has also recently started mining Bitcoin, and they have continued to expand and grow their hash rate. On top of this, CleanSpark is looking to demonstrate the cheapest cost to mine a Bitcoin in the entire United States of America. And if they can truly demonstrate this, they're going to have hundreds of new microgrid proposals, which is going to benefit their legacy business segment. This stock has fallen from a 52-week high of about $42.50 down to currently $21.30 per share. It has been cut in half. And in my opinion, CleanSpark at $21.30 is extremely undervalued when you consider this is a company that's going to be bringing in $1 billion in annual revenue sometime over the next 5 years and possibly even 3 years. Stock pick number 2 is actually one that I don't personally own, but this stock has been a favorite in my private members only Discord server, especially my moderator Stock Jockey. He has been hammering me to do a video on this and do some due diligence on the company. But I'm including them in this video because they too have almost seen their market cap be cut in half. Their share price has gone from $45 as a 52-week high down to $22.50 today. This is a really interesting company. They focus on data analytics and they're primarily a software business. Now, in the end, software generally results in higher margins than if you were a hardware business. So if you're looking for a company down the road that could be a cash cow, meaning it brings in profits and profits and profits, this stock might be for you. Palantir, or PLTR stock, is currently unprofitable. They've worked with multiple US government agencies, which include the Department of Defense and even the CIA, but just over the short term, they've increasingly been working with commercial customers, which is why investors are looking at Palantir to become a profitable business in the relatively short term. Stock pick number 3 is my colleague Jeremy from Financial Education's biggest investment currently. And as he would say, Tesla my Esla, ticker symbol TSLA on this stock. Tesla is undisputedly the leader in the electric vehicle industry, and it's pretty undisputed also that the electric vehicle industry is the future. We're moving away from internal combustion engines to electric powertrains. So with it, why not invest in the company that already has a head start and has production and deliveries already going? Tesla has seen their share price drop from $900 per share to about $550 per share today. So again, this one has fallen quite drastically. Now at $900 per share, there would be no way I would include them in this video. But the fact that we've seen the market cap fall so much means we've knocked off years of growth that was already priced into the stock price. Now the valuation is starting to make a little more sense, and expectations for Tesla going forward aren't near as high as they used to be even just a month ago. Beyond their electric vehicle business segment, I think their other business segments are underlooked, like their solar panels, their power walls, etc. In the long run, I think Tesla is going to always be the #1 player in electric vehicles. They're just too far ahead of the competition to change any of that. But as we get into stock pick number 4, which is my colleague Meet Kevin's favorite investment currently, we can see that there's room for more than one play in the electric vehicle industry. It's such a massive market, such a massive industry. Stock pick number 4 is Lucid Motors, ticker symbol CCIV. This is currently a SPAC. The merger has not taken place, so there's always a risk that the merger could fall through and not happen. People view Lucid Motors as being second in line behind Tesla in the EV industry. But Lucid Motors has a very, very nice niche in the industry. They're focused more on the luxury vehicles side of the electric vehicle industry. So again, there's room for Tesla, Lucid Motors, and even more in this industry. So again, I asked the question, why would you not want to invest in Lucid Motors currently? We've seen the share price absolutely get decimated from about $65 per share to around $22 today. And for a company that's probably going to be second in line in the EV industry, the valuation currently is very attractive. Now, what Lucid Motors lacks in comparison to Tesla is they don't have much beyond their electric vehicle manufacturing. They don't have these other business segments. Stock pick number 5 is in the same industry, the electric vehicle industry. But there's a reason I like this one in addition to Lucid Motors and Tesla, and it's because NIO, this stock pick, has an advantage in China over even Tesla. And if they can keep this advantage, they're going to do very, very well for themselves. And again, there's room for more than just Lucid Motors and Tesla in the electric vehicle industry. The key is finding the companies in the industry that have certain niches or niches, but also have a head start on the competition in certain locations or geographic regions. Now, I will say, when you're investing in Chinese-based companies, you need to exercise some caution because they don't have the same accounting rules that we have in America. So be sure you check through their financials, make sure they look okay, and if you believe in what they're saying and what they're doing, feel free to invest some money into the company. Moving away from the electric vehicle industry, stock pick number 6 is Virgin Galactic, SPCE stock. This one is very interesting. This is very highly speculative, but this company is focused on space exploration. And who doesn't want to go to space? It would be such a cool accomplishment and milestone in life. I know myself, I would love to experience what space is. I would love to touch foot on Mars or the moon, etc. But as you're thinking about these things, you have to realize this is probably years out into the future. You're investing in a company that is pre-revenue and probably will be burning cash for quite a while. Beyond this, a ticket to go to space is incredibly expensive, which automatically decreases the potential target market for the company. So it's very speculative, but could pay off big if they can decrease the ticket price. With this one, you're going to have even more patience because, as we've already stated, they're pre-revenue, they're burning cash, and it's going to be years before we see customers and consumers actually being able to go to space. SPCE stock, or Virgin Galactic, saw a 52-week high of about $63 per share. However, currently they're down to $27 per share. So if you believe in the technology, you believe in what the mission of the company is, why not throw some money into this company? Pick number 7 for this video is a company I used to own and I'm currently looking at buying back into. This one is ticker symbol RIDE, Lordstown Motors, and this is also part of the electric vehicle industry. The reason I like Lordstown Motors is because they're going to bring the first full-sized electric work truck to the market. They're going to beat Tesla's Cybertruck to consumers' hands. That in itself, like we've already stated, a head start on the competition is key when finding companies to invest in these emerging markets. Lordstown Motors has billions of dollars of pre-orders, and of those pre-orders, most of their consumers aren't going to back out of those pre-orders because they particularly are going after fleets. So those are businesses that have ordered these pickup trucks. Now, consumers like me can also pre-order a pickup truck. I myself even pre-ordered one of these trucks a few months ago. I don't know when I'll get delivery of the pickup, but when I do, you can trust that I'll have a video out on my channel reviewing what the truck is and its functionality. Lordstown Motors has seen its share price almost cut in half, from $32 as a 52-week high down to $16.50 today. So again, as we're looking at these companies, you can see there's a lot of potential for investment returns. Stock pick number 8 is again in the electric vehicle industry, but this one you can view as kind of all SPACs as a whole. I'm not just talking about Lightning eMotors or GIK currently, I'm talking about all SPACs as a whole. SPACs in general have absolutely gotten destroyed over the past month, and that ultimately has been bad for the overall market sentiment, because if retail investors aren't making good return, if they're not bullish on these SPACs, the overall market is going to seem more bearish in general. But when we look at these SPACs, a lot of them, GIK included, has seen their share price almost go down to net asset value at $10 per share. Meaning, currently with GIK as an example, the maximum you can lose per share that you own of this company is 98 cents. So you can see the risk reward potential with SPACs currently is just through the roof, which is part of the reason I'm so bullish on GIK right now. I think SPACs as a whole are undervalued. Net asset value at $10 per share, which is as low as most SPACs can go, doesn't price in any growth or revenues for the company. We've seen GIK stock in particular go from around $17 per share down to $10.50 even today. So if you bought shares at $10.50, the most you could lose per share of the company you own is 50 cents per share. Just to dive into Lightning eMotors in particular, they have working production and deliveries. They even work with Amazon and have delivered vehicles to Amazon, which I think kind of hilariously is part of the problem. People don't want to invest in companies that have working production and deliveries right now. We're all about investing in concepts currently. But when the markets return to investing in reality, what's actually going on, GIK Lightning eMotors is going to benefit tremendously. Stock pick number 9 is my favorite pure play Bitcoin mining company. This one is Riot Blockchain, ticker symbol RIOT. Riot Blockchain has seen its share price go from about $80 per share as a 52-week high down to $39.50 today. In the meantime, Bitcoin prices continue to increase, meaning Riot Blockchain is bringing in more and more revenue and their margins are expanding exponentially. However, their market cap, their share price have both been cut in half. In my opinion, Riot Blockchain is tremendously undervalued. And if you ask me if I'd rather buy Riot Blockchain or Marathon Patent Group, I would go with Riot Blockchain all day long. Along with this, the chances of Bitcoin going down to $0 per Bitcoin is almost 0% now. We have too many people that believe in Bitcoin. There are too many people out there that would hold on for dear life, even if reality hit them in the face and Bitcoin came out as being pointless. They would still hold on to the cryptocurrency, which would prevent the cryptocurrency from falling to zero. On top of this, we have S&P 500 companies like Tesla converting some of their cash to Bitcoin. So all of these catalysts combined kind of tell you that Bitcoin is probably here to stay, even if it's not a very viable currency. So while Riot Blockchain's market cap has gotten cut in half, Bitcoin prices have continued to increase, and S&P 500 companies continue to convert some of their cash to Bitcoin. Moving on to stock pick number 10, we have ChargePoint. Now this is one I actually used to own. I sold out of my shares at around $40 per share, but it proceeded to keep going up to around $50 per share as a 52-week high. Now today, it's trading around $26 per share. So again, this one's dropped about 40% in value. The reason I sold out at $40 per share is pretty simple. I saw that there were many years of growth already priced into ChargePoint. And you can view this number 10 as ChargePoint and Blink charging combined, because they both really hurt in the short term. But as both of them have almost been cut in half or more, the valuations are starting to come back down to earth. They're starting to make more sense. There aren't as many years of growth priced into the share price. And ultimately, EVs are the future. Electric vehicles are the future. Internal combustion engines, they're a thing of the past. And every single year, electric vehicles take up more of the market share of cars on the road. And with this growth in the EV industry, you're going to need your charge points. You're going to need your Blink charging to continue to grow and build out their charging infrastructure. So in the long run, I think right now would be a great time to buy into these electric vehicle chargers if you felt like you missed out on it the first time. Because I can assure you, in the long run, these stocks are going to go back to their 52-week highs and beyond. Now, I want to throw kind of a bonus stock in here, but I don't have 11 fingers, unfortunately. But stock pick number 11 is a company I used to own, and I'm really thinking about buying back into it. It's Flux Power, ticker symbol FLUX. It's seen its share price drop from $22.50 as a 52-week high down to below $10 per share today. So this one too has been cut in half. In the meantime, they've continued to grow their revenues at 80% or more. Their gross margin has continued to expand, and ultimately, the company's doing everything right. Flux Power manufactures batteries for lift trucks or forklifts, also ground support equipment, which are the vehicles you see on the runways at airports. They also have a partnership with Blink Charging to provide batteries for electric vehicle solar charging stations. Lastly, they manufacture batteries for warehouse robotics. And the need and demand for warehouse robotics is just increasing year after year. Let me know what stocks you guys are buying down in the comment section below. I'm really curious. I've been looking into a lot more companies lately, especially as we've seen their valuations drop so much. So again, let me know down in the comment section below what stocks you're buying. If you guys enjoyed this video, if you enjoyed these stock picks, leave a like on the video, share with a family member or friend that would be curious or interested in the stock market and investing, because I think now is a great time to start investing. Also, if you're new here or returning and not yet subscribed, do me a favor and hit that subscribe button down below. With that, guys, have a great rest of your day. I'll be back with another video this week. Peace out.